type of things. And so let me go ahead and share my screen. And I'm not sure if, let's see, share screen. Let's make sure
Yep.
it's the right one.
Yeah, when you share it, I'll be able to maneuver around.
There we go.
Okay. So let me do this and add it to the scene. There we go.
Perfect.
All
Um,
right.
so we have a few different products, but the one that the ones that are like a little bit more encompassing is, and we can talk, maybe even do another call in the future on full doc opportunity within non-QM. But the key thing, it's called Spark Prime or Spark Credit, has some different doc types that are available, having nothing to do basically with taxes. And so the first opportunity that may arise, or from that thing, is you basically go through somebody's self-employed taxes, and you realize that they may, let's say they gross $1 million, but because of opportunities that have been made available to them through small business tax breaks and that type of thing, that every year they seem to net minus $200,000. Obviously, we can't do anything with them conventionally, and I think that that's by design. I think that that's what the government would like. They'd like for them to pay. Let's let Rob get in here.
Okay.
Blah, 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 blah. Maybe he went. Okay, I think he did not come into the room. Hold on.
Okay. I need to send him a email invite, a different
Yeah,
invite.
or let me see if I can text him the link.
Okay. What I do is I send him a separate invite just in case there's some conflict with that one.
All right, hopefully that will work. He'll get in here with us. All right, back on track.
Okay.
Yeah, I'll just kind of keep rolling, and when he comes in, great. So, one of the key components for the Spark and the non-QM products in general is they have to be self-employed for 2 years. So that's where you start. And the good news is, especially if you're looking at jumbo, or some of the other products that are out there, even for full doc, is they have to be self-employed for a minimum of 5 years. It just looks dingy with this. Here he says he's joining. He'll be in. And so this can be an opportunity, like if you've got somebody who's full doc that's only been self-employed for 3 years, that type of thing. But the minimum is 2 years, 24 months self-employment as we start looking at these other document types. As you can see from this matrix, we have products that do go to 90% LTV, and we'll go through the different doc types for bank statements. I will tell you that anything over 80% for us is generally going to be kind of an accommodation thing. We can do it. It's not a problem. We don't have a problem, but they do tend to be a little bit more challenging, and the pricing tends to be a little bit more difficult the further that you get away from 80% or less.
Okay.
We've definitely put ourselves in a position where we want to kind of streamline this in the type of non-QM lender that we are. And we want to focus in on, better credit, lower LTV, and again, lower meaning, that 20% or more down in the purchase situation. So that's where we're going to find the better pricing. But as you can see from here, we go 85% with a 680, 700 to 90, 720 to 90, different options. And, it goes all the way to 3 million in those circumstances. So let's talk about these sorry. So let's talk about these doc types a little bit.
Okay, just real quick, Matt. Just real quick, Matt. Maybe you're gonna get to. I may be cutting you, taking your thunder here. But as far as the income, once you calculate the income, how much of that are you using? 100% of that, or is there some different calculation you guys are using?
Hey, Rob. Yes, I will get to that. We've got a couple different areas that we look at. Hey, Rob. We just went ahead and got rolling. We were just having fun. So good to see you.
No, that's cool. I'm just getting some closings all squared away for the end of the month.
End of month
There you
stuff.
go.
Gotcha. So how it works basically is personal bank statements. You can use 100% of the deposits, and that sounds very exciting. Until we kind of talk about the areas where you're allowed to use personal bank statements. The primary area for personal bank statements is someone who is self-employed, and they've been self-employed for over 2 years, who is paying themselves a relatively consistent monthly income, monthly stipend, payout from the business. And they need to be at least 25% owner of the business for any of these, programs in general. But specifically, let's say there's 4 partners and they each get a partner share every month that goes directly into his personal account of $10,000. If that's the case and it's directly traced back to a company that they are 25% or more owner of, we can use 100% of that $10,000.
Okay.
And in that circumstance, regardless of their ownership percentage in the business. So if you and I were doing a class for self-employed borrowers, and Rob was of course, doing the class as well. And we were instructing them how a year from now, they could be in a great position to qualify for a loan. We would tell them 10 times out of 10, take money from your business every month and put it into your personal account. Transfer $10,000 or whatever they need to qualify for, $8,000, whatever income amount they need. Because that, again, if you're in a position where you can help structure that in advance, but it doesn't happen very often, to be totally honest, that we run across small business owners and stuff like that aren't like kind of just living out of their business account, as opposed to transferring money to their to a personal account. And so that is the only circumstance whereby you can use 100% of the deposits on a personal bank statement program. The second place where we can use personal bank statements, and this will get into your expense ratio question, is if they're using the personal bank statements as their business bank statements. So we have a CPA that verifies for us on a letter that they've been self-employed for 3 years, but they've never quite gotten to the point where where they've set up a business checking account or whatever. Run into this with the gig economy stuff sometimes. The Uber before they kind of started to get in the 1099 thing. But where they're an eBay business or an Amazon business that they're running themselves, they just never really got to the point of really, filing that. So in that circumstance, we would look at it like business bank statements. When we're talking about business bank statements and how we've set everything up is a 12-month look back. 24 months, and there's a lot of companies that prefer 24 months. 24 months can really only get you into trouble. There are a number of different things that are sort of pitfalls in terms of bank statement calculation, and we will do all that work for you, and I'll get to that in a minute. And we'll calculate the qualifying income. We'll take care of all that for you. We'll explain it to you, explain the options in those circumstances. But when we're looking back on 12-month business bank statements, we will add up basically all the usable deposits, and we use a fixed expense ratio of 50%. And I have a full slide that I'll go into that in just a minute on how that all works in a little bit more detail. Many times when we're provided with 12-month business bank statement, we can't use them for different reasons. Number one, NSFs. They're only really allowed to have 5 NSFs in the last 12 months, and we would prefer 3 or less. And sometimes they get the overdraws and those type of things that will hold them back. Irregular deposits. I've had a number of borrowers who are like hedge fund people, and they get paid twice a year, like, $100,000. That's great. And we want to find a way to use that income, but it's not consistent enough to use on a bank statement program. Finally, declining income. You've got a real estate agent who's trying to buy a house. They had a giant 2022. 2023 hasn't started out particularly well. Their income has decreased. That would be a situation where we can't use bank statements as well. So our option for that, and an option that a lot of people really like, is our P&L only program. And I've got I've got examples of that we'll get into in a minute. But P&L is there as sort of the catch-all. As you can see, the LTVs aren't quite as aggressive and that type of thing, but a P&L is an option in those circumstances.
So the P&L is basically the Schedule C?
No, not even that.
No,
it's an unaudited P&L that's prepared by any sort of licensed certified tax preparer type individual, accountant, whatever.
CPA or
Yes.
tax preparer, licensed tax. Okay.
As long as they're licensed, that's the key component, because the only thing that they verify, because again, we're not looking at like we're not running 4506T. We're not doing any of that. So the only thing that they can kind of look up, assuming that everything looks good to them on the unaudited P&L, is that they're licensed. And so then that's what the investors ask. They just verify that the individual who put that together is licensed.
Gotcha.
And I'll get into 1099s are just easier for me to show you in a minute. And then asset utilization, I don't have any more screens on it, but it's a fairly simple idea in that I know that you can use assets as income on conventional as long as they're 59 and a half, and they set up a schedule with their accountant or their financial planner and deposit checks through and all these other things. This is sort of a play off of that, except for it's a little bit simpler in that we basically take their eligible assets, and we don't care how old they are. There's no employment on the 1003. We don't care if they're employed, all that type of thing. We just give them credit. We basically take the eligible assets and we divide those by 84. And so in that circumstance, then we would that would be their qualifying income would be eligible assets divided by 84. So it's a pretty simple loan program that way, with the only caveat being is they must have a minimum of 150% of the loan amount in post-close reserves, which can also be the assets that you would be calculating the qualifying income off of. So they're both, it doesn't have to be on top of that or anything. In most cases, they would have 150.
Is that only when you have to use the P&L? That's
a totally separate doc type so there's P&L, and we'll go into that in a second. But asset utilization is its own beast in its own right.
Okay.
Like it's somebody comes to the table, they came into a bunch of money, they've never worked. That type of, and they want to buy a house and they want to put, 50% down and then they want to, this is the program for them. They're 35 years old or whatever. They've just had a big inheritance or whatever. This then allows them an opportunity there. So it's completely separate from any of the other doc types.
Gotcha. Okay.
I'll come back to each of these in a little bit more detail. I wanted to jump into our primary product really quick, and what we've been really focusing on is Nitro. And as we talked about originally, and this is like our premier alt doc program. Nitro is 75% to 3 million with a 720 credit score, 75% to 2 million with a 700 plus. And has cash 75% to $1 million as well, 70% to 3 million. These are for 12-month bank statement only. And again, this is going to be for that real target area, like we talked about. Somebody's selling one property, and we're doing a bank statement program, and they're buying another property. They want to avoid capital gains. They sell them $500,000 that they owe free and clear. They're buying $1 million, putting $500,000 down. This is the program. I'll show you in a second. Pricing is incredibly strong. It's really been a great focus area for us. And the two doc types that we allow in this are the bank statement or the 1099, which, as I said, I'll get into just a bit in a second. But to kind of go over the details of Nitro, and we've got follow up, and we'll get you matrices and all that type of stuff with it. But
Gotcha.
It's a primary residence only product. So the reason that we chose 12-month bank statement to focus in on is 55% of the loans in non-QM in general are bank statement programs. So we wanted to figure out where we could take a big bite out of the pie on that. And we have a couple of investors, one specifically, who's very interested in 75% or less and 700 plus credit. And so we were able to develop this product with that investor specifically for purchase, rate and term, and cash out refi. Anything over 65%, you have 500,000 max cash in hand, and anything under 65% has unlimited cash in hand. And in both of these circumstances, we can use the cash out to satisfy the reserve requirements, as we can in most of our products. This is one of our only rural options, as long as it's not ag or mixed use. Which obviously with 20-acre rural, it's like 50-50 on whether it's going to be ag or not. But that for the options when they're not, we can go up to 20 acres on rural properties. We talked about the credit score. Again, this one needs 48 months clean of major credit hiccups. Again, we talk about the fixed expense factor, and we'll talk about the default 1099, but it's consistent for all the programs. But the DTI on this one is a 50%, and it doesn't matter whether it's a 49% or a 3%. The pricing is all the same. There's not pricing tiers within this or anything. So, we don't have to feel like we have to squeeze every penny out to get them into a different pricing tier or whatever. The reserves are here, very basic, 3 months PITI. If they're putting 25% down, we usually don't have any issues with this. And the last thing that I love to point out on this is that we can do 100% gift. And this is a very unique, this is something that I haven't had, as we develop this, is something that you only have to verify 5% of their own funds, but they don't have to use it. So in theory, they can take an IRA or 401k or whatever, something they wouldn't want to liquidate, but that has cash value with regards to assets. And they can just show that, and then they could get the entire 25% down as a gift. What we do a lot of cases when we sell this is a lot of times people reach out on the self-employed and they want, what's my minimum down? And you're like, well, great, I've got this Spark Prime. It's got 10% down. And you go through it with them and you offer them, a 9.625 or something like that at par. And they're the ones that asked you for the minimum down program. And then when you give them that rate, they balk at you a little bit. And so one of the things that this allows us to do, and I'm going to go ahead and pull up the pricing real quick. Where is that? Oh, I know where it is. I'm going to bring up the pricing real quick. Is be like, okay, so pricing is something that's important to you. Let me go ahead and shut this down. So let's talk about a different option. In this case, you had a 721 credit score. We were looking at 9.625 on a 30-year fix. Now, if you can get a gift, I know you said you had 10% or whatever, or I did look over and you seem to have plenty of assets and want to put more down. Well, then we can start getting involved in those more aggressive prices. So again, I just had to run this through. When you're going through the pricer, it's alt doc for anything that's non-QM. Make sure you hit non-QM and fixed, as we talked about last week on the DSCR. 75%, so it's 25% down. Purchase 30-day impounds. Yes, they can waive impounds. It is an option. I just put in a Texas area on this, and then basically just click on show me the rates. And what you'll see very quickly, hopefully, assuming the magic happens quickly, which it usually does. There we go. Are our options down below with Spark Nitro. So again, it's running 3/8 or so better than the Spark Prime pricing. Again, it depends on what kind of mood Rob's in, but we can probably get to this 7.375, very nicely with that 0.025 cost. He may even cover that for you depending on what kind of day he's having, and then and get that taken care of. So again, you see the Nitro rates are much more aggressive. You can go back to him and say, hey, if you had mentioned that it was specifically rate and not about down pay. If you're in a position to get an additional 15% down gift, we can go ahead and get you, this was, and we're up a little bit on this. I'm going to say versus where, I was talking it through before due to this whole debt ceiling thing. Everybody's pulled back a little bit here. And then my guess is once the debt ceiling thing gets taken care of, we'll get back to the rates that we were offering. And that was like 7 1/8 on a 30-year fixed at par, which is a big enough change where then you're taking it and putting it back in their hands to say, no, we can totally do rate if it's that big of a deal. Just, again, get a gift or put 25% down instead of the 10%, which I provided you because you said you wanted the minimum down payment. Okay. Make sense?
Yes, sir.
So a very nice option if there's ever a situation with these self-employed borrowers and pushback. Jumping back into this, I had talked a little bit about how we do the bank statement calculation for you. So this is something you work with Rob on. We've got our bank statement review form. It's a fillable, savable PDF. So you can just type on it, or Rob can type on it and then just save it as the Johnson, bank statement pre-qual. The basics are is we want to make sure that they've been self-employed for 2 years. And this is a way in which before we go through all the work of calculating the bank statement income that we can, make sure that we're doing it in a viable situation. And there's why percentage of ownership is such a big deal is that goes into the calculation, just like you had talked about with the expense factor. The first factor that goes in, and again, we'll use that 10,000 as an example, is the percentage of ownership. If they're only a 50% owner in the company and there's a gross of 10,000 every month that's deposited, I need to cut that in half right from the beginning, because obviously there's another owner who would be entitled to the other half. So the first part that would go into the equation is their 50% ownership. That would take it down to $5,000. And then we would hit them with that fixed expense factor, which would bring it down to $2,500 in qualifying income. So we asked for a few more details of the transactions. And again, just so that anybody can do a little bit review before it comes in, how many NSFs we've had in the last 12 months. What we will provide you, it will provide Rob, and he will talk you through, is a pretty extensive spreadsheet. But the basic screen that's the most important is this. And this is an actual borrower that we had. They had gross deposits of 4.5 million. The net deposits were 3.5. Because we have an underwriter pre-qualified, it's not an automated pre-qualification system with regards to calculating bank statement income. They were able to go in and see that they had transferred $1 million from a personal account. And so instead of it calculating that 4 million and giving you that qualifying income, in this case, we were able to be more discerning, which is why I really like how we do it here, that the same underwriters that'll be underwriting your file will be calculating your pre-qualifying bank statements and the income. And then they put it into a folder. And then when the loan gets submitted, they go back to that. It saves them time during the underwriting process, but at the same time gives you consistency. And so we applied that 50% expense factor. We divided by 12, and the monthly net income came out to $73,000. I called the loan officer in this circumstance, and I said, pull up the 1003. I'm really excited. I mean, you're like 73,000. We should be in really great shape. We ran through it together, and as it turned out, they had a 60% DTI with this 73,000. And so the guy basically said, I guess we're dead. We can't get it through. I mean, they had so much money coming through. What's the issue? I'm like, well.
He had a 60% DTI with making 73,000
73,000, yes.
Good Lord.
And I know.
He's living it up.
That's what I said.
He's living it up, man.
Yeah, he's got a few things going.
Yeah.
And so what we basically talked through is, I'm not sure the nature of the individual's business, but remember, we're using a 50% expense factor. If the CPA will confirm through a letter saying that the expense factor for that business is actually lower than 50%, then we can recalculate this based on that expense letter, which again, the first thing of that is it has to be reasonable. And it's not like we're going to take it 100% of the time without applying reasonability to the expense factor letter from the CPA. But if it comes over on CPA letterhead with CPA signed and a license number on the bottom, like they did in this case, and it turned out that the CPA, that they only had a 39% expense ratio for this particular business. And so we were able to get over the 91,000 in income, and we had no problem in getting under 50 once we were provided. So like, these are guardrails. And in 80% of the cases, if you submit it at 73,000 and that works off that 50% fixed, that will work and we won't need to get anything else. But again, I always tell everybody from the beginning, if the underwriter sees that, let's say the money that's coming in every month, they're ending up every month with a negative in their bank account and that type of thing, they may, in those cases, say, I'm worried about the overall health of the business. I need a CPA letter, that says that the 50% is the fixed. But we will tell you that when you provide us with the bank statements for the pre-calculation. If there's some reason to believe we can't use the fixed, we will tell you that before you ever submit the loan to us.
Okay.
And so again, we went through and we ended up submitting this loan and funding it. So I had talked also earlier, and again, not to just pile a whole bunch of information on, but how the 1099 income calculation works. And I want you to think of the 1099 on its own right, not the 1099 that was filed necessarily, but just, let's say it's January of 2023, end of January, and they get their 2022 1099. In this case, you just basically take whatever's in box 1, you multiply it by 90%, and you divide it by 12, and that's your qualifying income. 1099 gets a default 10% expense factor no matter what.
Okay.
The one thing we will need to show, and it is important to know this from the beginning, is we will need to show the continuance of the income from this source. So if we're 6 months into the year like we are right now, We would want to get a year-to-date pay stub, which they get on these 1099s, even if it's direct deposited into their account, showing how much they've received month to date from this particular source. In some cases, we can run into some inconsistencies and things like that as well, but it allows us to know right up front where we stand. And we can't give them credit based on what they did last year if they're not still getting money from that source this year. And a lot of these guys are contracted for 2 years or whatever the deal is. And if we get them, it's very advantageous if we get them while they're in that contracted period, because they usually are getting consistent amount every month.
Okay.
Make sense?
Yes, sir. Good deal.
Excellent. Let me jump to the P&L really quick. The P&L, to be really straightforward, is a very, very basic and a very easy program to get done. A lot of times, like I said, you'll provide us with the bank statements, and we'll see, overdraft or, different inconsistencies on the bank statement that don't allow us to use bank statement. And the best way to do it is to get around it using an unaudited P&L provided by the CPA. We do sort of, and again, this is something that's on the we reserve the right to have an attestation letter sent to the CPA to say that it's their CPA, because it wouldn't necessarily make sense for somebody that's not familiar with the business to provide a P&L. But as of now, I have not been in a situation where we have asked for the attestation letter.
Okay.
So with regards, and I know this is probably very small, and I apologize. This is an actual P&L that we funded a loan based on. And I guess I always use it as an example because it's not very complicated. The CPA did it. They had their license number down here. They had signed this in the other, but we blocked that out. It was basically August 21st, August of 2021 to August of 2022. So it's a 12-month look back. It's not last year's necessarily, but looking at the most recent 12 months. In this circumstance, they came out to $534,270. We just divided that by 12, and that was the qualifying income. And that's this net income. You just take the net income on the bottom and divide that by 12. It was nice because we'd already seen the deposits, but in this particular circumstance, there were some NSFs and some other things that made it that we couldn't do it. So we knew there was a lot of cash coming in. And so we knew, obviously when the P&L came over, it was one that we could move to that level because there wasn't, a concern that any of it would be manufactured. And so one of the biggest issues with regards to the P&L and why they cut us the 10%, like we're at 80% on P&L, and most lenders are the same way, is it pushes a particular element out. It's the easiest thing actually, for there to be fraud involved in, and they want to try to avoid that in all cases. Obviously having nothing to do with Edge or you or any of that kind of stuff. But there, were some bad apples in the past that kind of spoiled it for the bunch. So that's why the LTVs get cut a little bit on the P&L stuff. It's sort of just to weed out desperation, for lack of a better term. And so that's how those go. So as we had shown, all of these different doc types are available under Alt Doc. Always do the 12 months for the business or personal. There's our investor debt service coverage from last week. P&L only 12 month, perfect. 1099 1 year, perfect. And then that asset utilization we had discussed. And so these different doc types actually encompass 3 separate products. The Spark Nitro bring our primary with the 12-month bank statement, the 1099 only, and then our catch-all products, which are the Spark Prime products. And then we have what's called Spark Credit Alt Doc that follows the exact same Alt Doc coverage, but is more lenient for people that have had credit issues, oddly enough by the name, credit issues in the last anytime after 12 months. So it has an option for somebody who has a BK that's 16 months old. It has an option for someone who had a BK at 26 months. Another option for a BK at 37 months. And so that's where Spark Credit part comes in, as well as being a product that's available in Spark Credit for those individuals that have had the credit issues and are potentially full doc, and don't have under 48 months clean in those circumstances. Cool. So Rob has a number of products and can go over that if you've got someone, especially if they're full doc and coming to the table with a BK that's 24 months or a foreclosure 3 years ago or whatever. Those are not ones that we have to just push away. We do have options for those as well.
Okay. Well, I do have one specific question. I
Sure.
have a prospect. I do have a prospect that's a business owner. He's in the construction business, and they're moving from another state. Um, he does have managers. He's been in business for years. He does have managers in the current state that he's in, but he's going to be moving to this state to set up a new branch. That is so. In that case, would that person, even with his bank statements, be able to qualify? And his wife is actually she's a wage earner. Is there a combination that you can use to include her as well?
Absolutely. Couple things with all these programs, it's primary earners middle credit score, which again in self-employed can be beneficial, in different ways. The W-2, I don't know how if she can stay W-2 at the same job that she's at, like maybe she's working remotely or whatever. No problem in mixing income. We can give her credit for the W-2 income and him credit for the self-employed, as long as he's 100% owner of that business, where it was before. That business is staying in, even though he's moving, they've got, 24 employees that are in Oklahoma, and he's going to keep that going, and he's moving to Texas, and they're starting another branch down there, but we can still count on that income that was there before. And it's not, if he's the only owner, it's single entity and he doesn't have any employees and all that stuff, and all of his construction was based on what he was doing with his own two hands, that's going to be a little bit more challenging. To be able to give him credit for past income if he's moving to a new market. But if it's
he has full crew.
Perfect.
Definitely has a full crew. The only question that they really had was is the even though he may not even need the wife's income, the spouse's income, she won't, even if there's not like a long gap. Let's say she as soon as she gets a job offer here, it won't be, and she stays in the same profession. Would that not be something that you can use, or
You'd
would
be
that
all
throw
you'd
her
be all
out
right
there?
with the how many, Rob, in general on conventional, how many pay stubs do we need? Do we need 2?
If she's making a switch, or I'm sorry, moving from one location to the other and has a accepted job offer, you can
Yes.
actually use the job offer letter as long as all of the necessary background checks and whatnot have been cleared and you have an official start date.
Okay, yeah, because you won't have a gap there, and it's going to be in the same profession.
Yeah, that's fine.
Okay.
Yeah, that defaults to Fannie. That's why I went to Rob with regards to that. And so your full doc stuff in general with us, you in any of the non-QM full doc options like that, or again where you're calculating income as you would in a full doc, even though we've got one borrower who's self-employed. Anytime that it's applicable, full doc, most of it just defaults to Fannie.
Okay, gotcha.
Yeah, I kind of do the trickle down on it, where I'll start with Fannie guidelines, Freddie guidelines. All right, this isn't going to fit here or there, and then move down to the next step of the game, which is either FHA if warrantable, or non-QM, and we just work it from there. Solutions for everything.
Gotcha. Appreciate it.
Yeah,
Good deal.
and so that's the key component. Do you have any other specific questions or anything else that I can help with today?
Nah, that was the one that was really kind of bugging me a little bit. That's trying to figure out is there a product out there for this particular type buyer with that kind of complicated situation.
Yeah, I mean, it sounds like something we can definitely work with, especially once she gets the job rolling. And, like we do a business narrative. He was doing this for 10 years, wherever he was. They want to expand into this market. This will be staying in place. He's 100% owner of the business. All that income is still coming in. And that'd be another one where I might take a look at personal bank statements to see if he's been paying himself, a monthly stipend, with regards to that. Because it's like a bigger business, and he probably is, especially if he's someone that's looking to move somewhere else. And that may be an opportunity where we can use personal bank statements to use 100% of the deposits.
Good deal.
So
Good
keep
deal.
us in the loop on that one. And if you want to go into any more detail or do any more meetings, I'm totally available. Obviously, Rob's available anytime. You know, more than willing to go over any more products or any more options that you'd like to.
All right, I sure appreciate it, man. Matt, Rob, thank you for both for your time again. You know, man, a lot of good information out there for the people and for myself to help the people get things done. So I sure appreciate it again.
You're welcome. Anytime.
Thank you so much.
Anytime at all.
All righty, man.
All right, guys. Have a great week. Great month.
You too. Enjoy.
All right. See you guys.
Have a good one. See you guys.
Bye.
Type of things and